Good morning. It is Monday, November 10th, the day ahead of Veterans Day. And to all veterans out there, thank you for your service. It is greatly appreciated. To all your stock investors out there, I hope your day is getting off on the right foot. The market is up in the pre-market. I think the news that this shutdown is going to get resolved and the government's going to open up. If you have a flight, that's probably good news. There was probably some anxiety around, hey, is my flight going to be canceled today or is it going to be okay? I think that was going around. So we'll see if they can open up the government and then figure things out. I am joined by my colleague, Daryl. How you doing this morning, Daryl?
Doing wonderful, Victor. It's good to be here. Hello, everyone.
And no government shutdown is going to keep this live stream from communicating with you guys. We appreciate everybody joining this morning. It looks like last week we had kind of a rough week. It was overall for the 5-day, it was a week where the S&P went down about 2% collectively, and it's showing 5% now. I could have sworn it was 2%, but anyway, it went down, and it was a couple rough days. And those rough days, I know they dinged my portfolio, and they probably made everybody aware that, hey, stock prices do matter. We can't go higher and higher forever. We had a couple of examples where you had companies that announced earnings that were positive. They were good earnings, but their stock prices went down. I could probably point to 25 different companies where that was the case. And I think the market was just looking for, hey, is this a good point? Maybe to take some profits, maybe just risk off a little bit. And I can't blame investors for doing that. I think we are in an expensive market. That might not be a bad idea, especially as you get up there in age. Speaking for myself, as I get older, I have to start thinking, boy, I love catching these really nice growing stocks that appreciate really well. Boy, they're fun. It's kind of like catching a big fish, and you're like, man, love catching those. But they come with a lot of risk, and it'd be nice to get into a portfolio where I have less risk, more stability, maybe some more income. So I'm thinking ahead 5, 10 years and thinking, yeah, I could totally understand with investors wanting to take some of those profits and put them into something that's less volatile. So the market was down a bit over the last week. Looking at the weekly heat map, NVIDIA gave up some of its, great value. It's still the most valuable company on the stock exchange. A couple of others in semiconductor followed. Microsoft didn't have a good week. Palantir had a rough week. That's a really high price stock. So I can't blame investors for taking some profits there either. We have the software space has been really sold off. Looks like CRM, Salesforce sold off. Meta is continuing to have a rough time. They announced their earnings, and they kind of do deserve to be treated this way by the market. They were spending a lot of capital, and they couldn't explain to investors, the owners, the stockholders, hey, we're investing all this capital, and here's what we have to show for it. They just came up empty with showing real factual examples of, hey, we spent all this money on AI. Here's what we got. They didn't have anything. They just had some stories, and that wasn't good enough. So they've been kind of getting mistreated a bit. Google's been holding on. Apple's been holding on. Berkshire, when things get rough, some investors, they go with Warren Buffett because they think he could really take advantage. When things get really bad, that's when Warren Buffett, has his real good deals going on. Sure, Berkshire Hathaway is going to have that culture of doing really good deals when things are bad. The insurance space had a great week. That's good. I'm in Allstate. I know that their earnings were good, and I like what they had to say. Their stock went higher. As you would expect, when those high flyers go down, the consumer staples did well. Walmart, Costco, Coca-Cola, the tobacco stocks did well. A couple of the healthcare stocks did okay. I understand that the market is putting the health insurance payers and some other health insurance companies under pressure. The bill to reopen the government doesn't include subsidies for the Affordable Care Act. So I think that's going to put pressure on healthcare. Energy had a decent week. Utilities had a decent week. And then real estate had a decent week. So that's a quick overview on the week. Any highlights you want to point out that you saw last week worth noting?
No, I think you pretty much covered what I was seeing as well.
And this week we have more earnings. If you didn't get enough earnings over the last 2.5 weeks, boy, last week it's like having a buffet with 50 times too much food for people to eat. There was just too much of it. Last week we had a ton of earnings. This week we have a lot of earnings. Not as many, but still too many. And today we had Barrick Mining is going to announce before the market opens. We're going to have CoreWeave announce after the market closes. Oxy after the market closes. A couple of space companies are going to announce after the market closes. We had Tyson Foods before the market opened. And along with those, we had Instacart, Monday.com, eToro, which are going to be 3 stocks that we're going to cover and we're going to do deeper dives on and really analyze to see what is going on with those businesses. So let's get started. Let's jump into it. Let's get into Instacart and see what this grocery delivery company, who decided to name their company to confuse many, including yours truly. When I first started analyzing Maplebear, I'm like, Maplebear, Instacart. I know them as Instacart. That's what, my wife and I use when we order groceries online. And the founder's from Canada. He wanted to put a little Canada in there, so he put the maple for the maple leaf, and he came to California. So California has the bear on the flag. So Maplebear, there you have it. So you just got to remind yourself that, hey, it's Instacart, the business, and the corporate name is Maplebear. Maybe someday they'll change it to unconfuse many. Now, the stock is up 6.8% in the pre-market after announcing earnings. They did top earnings, and they have a pretty good report. Let's take a look at their orders were up 14%. Overall revenue was up 10% in the quarter. That's very good growth. And they have good partnerships, especially with Kroger. Kroger is kind of like their main grocery partner. And I think it's smart for Kroger as well as Instacart, because they have to take on Walmart and they have to take on Amazon, who has Whole Foods, and then they have Amazon Fresh. Amazon's trying to move further into fresh food. But I think Instacart's going to be just fine, because if they could specialize on delivery of groceries as well as other items, they're trying to deliver other retail items, they're going to be fine, in my opinion. So their revenue came in really, really good. They also have very good cash flow on their balance sheet, making them a very good investment in my book. Their revenue, if we go to the quarterly, it's not showing the most recent quarter, but they are growing 10% as the number keeps, building. You keep getting a bigger number. The percentage growth rate is not going to be as big as previously because you were smaller back in the day. So that's what's going on there. When we look at a forecast for Maplebear, 26 analysts cover it, and they agree that this stock is being, I think, misunderstood and not treated at fair value. They believe it's discounted by 45%. That's a pretty good discount. And I agree with those analysts. I think that a company that's growing at this rate with earnings per share that's growing faster than its revenue growth, you look at this outer year, this looks pretty exciting. In 2028, their profit's really going to go up 79%. Their PE ratio is going to come down to 7.6. Maplebear is a good margin business that has a position in the future. We're going to order more groceries online. It's just too darn convenient. Everything's being ordered online, but the grocery category is unique. I like companies that specialize in a key addressable market that has a big market potential. And I think this one does have it. So I really like that outer year. I'm an investor in Maplebear. I'm really liking what I'm seeing. And let me turn it over to my colleague, and then I'm going to come back and show you my valuation, which I've already updated on Maplebear.
Okay, so they've been on a downtrend since basically the first week, end of the first week of August. And basically that has come after several announcements. So Amazon announced their grocery same day delivery on the 13th of September. And that caused a 11%, 11.5% drop that day. And then on the 19th of September, Amazon announced a Winn-Dixie partnership. I think they're mostly southeastern grocery chain. But on the 19th of September, let's see, was it the 19th? Yeah, over here. So they took about a 8.5% haircut that day. And then on the 29th, Dash and Kroger announced a partnership. So that was on the 29th. And that caused a 10% drop. So all of these announcements have just introduced the concerns about competition with cart. And then finally, on the 30th of October, Uber and Kroger expanded their partnership in certain areas. So the 30th of October would have been right there, and that only took about 3% off the price. So they have had some announcements that are impacting them, but they put out a pretty good report today, and they are going to be up. Let's see. That's not what I wanted. Well, anyway, I don't know where I put that particular. How much are they up in the pre-market, Victor?
They are up 7% as I speak.
Okay, so that's really good. That's what I was looking for.
Yeah.
So anyway, they have been on this downtrend. I have this downtrend line connected to this high close here on the 8th of August and this peak here on the 15th of September. It would really be wonderful to see them break above this downtrend line to break that trend of downward prices. They have finally gotten back to about a 40 RSI. It's sitting at 41.3 this morning. The PPO has been negative basically since the very first announcement with Amazon moving into the same day grocery business. The interesting thing is the accumulation has returned back to a 52-week high. So I think investors are moving back into this stock at these prices. I'm not really seeing that a whole lot in the price by volume bars, although I do see quite a bit of volume starting at about $39 down to this $36 range. So there's a $3 window between those two bars there. So anyway, they have underperformed the S&P 500 by 32%. They're underperforming discretionary by 32%. They are outperforming specialized consumer services industry group by, they're underperforming. That's 8% down. And that particular group is underperforming over the past year by 26%. So they've been struggling. They did have really good volume on Friday. Looks like at least 2x or maybe 2.5x their normal volume. And they did almost create what they call a bullish engulfing candle. It didn't quite do that because the open would have had to been below this red bar that we're seeing on the day before. So it's not really a bullish candle, a bullish engulfing candle, but I think it is a bullish candle nonetheless. So anyway, that's what I'm seeing with CART. I'm also a shareholder with a very small position in CART.
So if I could ask a few questions just to confirm I understand what I'm seeing. So looking at where the trading volumes have been, the current stock price doesn't really have any stranded longs. It has a lot of people that have probably exited the stock and could potentially see some additional investors come into the space because it's pretty much trading down according to the charts. Am I reading that correct, or is there anything that I'm kind of off on my observation?
I think your observation is correct. It does look like investors are coming back in. That accumulation is at a 52-week high, and we did have big volume on Friday, and that was before their announcement. I don't know of any other catalyst on Friday. That would have been the 7th. I know they got a downgrade not very long after this 30th October announcement with Uber and Kroger. They got a downgrade that did push them down. But Friday, I think people, maybe some whisper numbers got out or what have you, and the volume was very high for a non-eventful day other than the market being open.
Yeah, Friday we began to hear that a deal was in the works for the shutdown, getting the shutdown kind of put to rest. And I think that's what caused the market to go up a little higher. So good stuff. Thank you, sir. And looking at my valuation of Instacart, I agree with the analysts that are saying that the stocks almost, I'm right bang on their average 44%. They were somewhere around that. But the cash flows are even better. The cash flows that Maplebear generates because they have a lot of margin. And you think about their business, they're not buying the inventory and carrying the inventory. They're not depending on these low margins that grocers have to depend on. They're doing the delivery. They're kind of taking one of the value add pieces to the whole experience for this online shopper and providing it. I'm trying to provide the best experience for shoppers that are online for grocery. I think Maplebear is a really good opportunity for me. I'm going to keep buying shares. I've already owned shares. I was waiting for their earnings to come out just to make sure, hey, everything that I believe I know about Instacart is what I think is going to happen. So now that I see really good numbers, I'm going to buy more shares of Instacart this week. I don't know that I'm going to buy on a day when it's going up 7%. That's not exactly what I like to do. But yeah, back to back on Friday, it was up 5%. Now it's up 6.78 as I speak. That's a good 5-day, or actually a couple of days, because over the 5 days, it's not even. Well, it will be even out once it opens. But this stock overall, I think, is being discounted because I think as you look at businesses that have to compete with Amazon, the market may automatically count that business out. Oh, you're going to compete against Amazon? You're going to lose. Got it. I'm an Amazon stockholder. So now if you're going to start an e-commerce business just distributing or selling general merchandise, you're done. You're not going to compete against Amazon. You're not going to make it. You'd have to move heaven and earth. You'd have to move the planets around in our solar system in order to do that. But when you deal with a category of fresh food, perishables, fruits, vegetables, I think the specialization is important. Speaking for myself, I get annoyed I self-checkout at the grocery store, but I guess back when we used to, put our groceries on the belt and then they handle your food. Now, it's probably because when I was a youngster, I think I was 16, I did work at a grocery store for a summer, and they taught me how to bag groceries, how to take care of another person's food, not to bruise their bananas and all that good stuff. And nowadays, it seems like they would mishandle my food and just bang it around as they put it in bags. I didn't like that. When I think about food delivery, I have that same preference, which is I want it to be handled right. I don't want my food to be, banged around like a, bag of footballs. And I know that some of our DoorDash food kind of gets banged around. And we put a nice bench in front of our door. And for some reason, the DoorDash drivers, some of them, they put it on the floor in front of our door. And it's like, guys, we put a bench there. We had to put a sign, hey, delivery here. So the handling of food, I think I guess maybe that's unique to me, or maybe a lot of people feel the way I do. I want somebody who really knows what they're doing, handling groceries that I'm going to order. We're coming up on Thanksgiving a couple weeks from now. And I think they're going to have a nice spike because you can take one thing off your list, right? You can order all the things that you're going to need, even schedule them to be delivered. Boom, they deliver them. And you didn't have to go to the grocery store. It saved you one trip. And that's always a really nice, convenient thing. So that is Maplebear. They're having a good day, a really nice day. I'm having a good day so far. And we have a couple comments that I wanted to address. Magical Self wanted to know what kind of ETF do you recommend to invest in yourself? So I'm going to give you a couple.
Do you think it's kind or bond? Magical Self, why don't you let us know what you're referring to there?
Yeah,
Is it bond or kind?
It could be bond. Well, let me give it a minute and maybe he'll comment on that. Because I have comments in either direction he goes in. Now he had 3 questions, so it gives us time to.
Yeah.
Would you invest in General Dynamics? So I covered General Dynamics in a member-only video covering aerospace and defense companies, and General Dynamics looked pretty good, I think. Let me take a look at where I had General Dynamics. I'm running off memory, and it's quite early. I'm only 1 cup of coffee into my day, so let's test my memory.
He did clarify that it's bond.
Oh, perfect. I'm glad he clarified. So General Dynamics has really good pricing. The cash flows it has look good. The earnings per share look good, and the overall blended discount look good. These guys over the 1 year up 12%, 148. I mean, it looks good. Am I investing in General Dynamics? I'm not an investor yet. I think it's a good looking stock. And I would be a buyer of General Dynamics, but I'm going to think it over. I'm currently in a slow buying pattern when it comes to stocks that I'm unfamiliar with, especially small caps. But I think General Dynamics looks good. It's really, if you're an older investor and want kind of more stability, this one does pay a small dividend, but this one will give you stability. This is aerospace and defense. They have contracts that are probably 10 years long with the military. It provides stable income, but it's not going to be the next Robinhood. It's not going to be the next Palantir. It's not going to go up 1,000% over the next 5 years. So that's what you're giving up. You're giving up the possibility of it really growing your wealth fast. So those are my comments there. Speaking of bond ETFs, there's 3 of them that I'm buying into. Now, when you invest into bonds, you can do it the hard way and buy individual bonds, which I do. This is my bond ladder. I have a couple of them that are going to redeem. One is going to redeem on Saturday. I think I'm probably going to get the money on Friday, and then one's going to redeem on Monday. So doing this, I think it's a good exercise for older investors. Young investors, if you're under the age of 35, I don't know how many bonds you should be buying. But if you're getting up there in age and you're beginning to look at income as being a key attribute to your portfolio, I think buying some individual bonds and understanding the mechanics of how bonds work is a pretty good idea. If anything, just study how these bonds are priced, how they go up and down. But I have to admit that buying an ETF based on what I think is a good investment is a good idea. And I invest in, for short term, BSV. These are all Vanguard ETFs. I like Vanguard because of its pricing, very low management fees. So BSV, short-term bond ETF. VGIT, intermediate treasuries. And then long-term, VCLT. I have the exposure. That way I cover the 3 different terms: short, medium, long. I tend to buy these just on days like today. I think today bonds are going to go down in price and the yield is going to go up. And I'll probably buy some bond ETFs. Any comments on which bond ETFs you like to buy?
Yeah, for short term, I have SGov, so that's treasuries that are 3 months. I do have some high yield corporate bonds, SPHY, and I have long term bonds in SCHQ. I stopped buying those quite a while ago, and I'm moving more into midterm bonds, which is HCHR. That's a Schwab. I'm pretty sure it's Schwab. And then SCHO as well. I like the SCHR because that's kind of in the middle of the curve. So as the yield curve starts coming down, the mid doesn't really change that much in price, but you're getting your dividend payments, so it's pretty stable. The short term are going to be coming down, the yields. And then SCHQ, I was buying those. Those are long term, like 20 years or so, 10, maybe 15 to 20 years. It's pretty comparable to the TLT, if you've heard of that particular bond ETF. It's pretty similar to that one. I think it has a little bit less expense ratio than TLT.
Excellent. All right. So, and then I think I'm going to call it the final question in this block that Magical Self had is, what sectors look good to invest in? Well, the sectors, look in the rear view mirror for the last, this is year to date, so I guess the last 10 point something months. Semiconductors flourished. Now, is that going to keep flourishing? I don't think so. Infrastructure stocks, some of them flourished. I don't know if there's a lot left there. I think the market's beginning to pause, like, whoa, hold on a second. Stock prices are really expensive. So there's some sectors, Google's nice and high. Financials did okay, but the sectors that I would point and say there's probably a lot of value are real estate, software, healthcare in some spaces, especially growth related or companies that are experiencing growth in healthcare like biotech. You can find you could like remove the name of the company, compare a biotech stock against a technology stock, and you would see the same fundamentals. You're like, wow, that's a great business. I should buy shares because it's been discounted, and it'd be a biotech stock. um, Other stocks. So those are the spaces that I would point to. I think those spaces are worth investigating, doing some research, and seeing if there's something there that you would like to invest in.
Let me show you a chart.
Sure. Falls Grave, we're going to put TTD on the list. Go
So
ahead.
I watched these bullish percent index readings on all the various sectors. And this is consumer staples. And notice how bearish the market is on staples right now. And also look at the price of the XLP. So whenever you see it get this low, you're almost at a bottom. So that was in 2020 during the pandemic when the bearish or bullishness got this low. You were also at a low in the XLP. When it got low here, you were also at a low in the XLP. Here we are at a low, and you were at a low in the XLP. So when market participants get this bearish on a sector, that's typically a really good time to start looking at them. So you can use these kind of charts to kind of make decisions on where you want to start moving in. I mean, this past year, basically, you can see the trend downwards, and it's basically AI just sucked all the oxygen out of the room this year. So people forgot about dividends. They forgot about the old school businesses. There's still some really good businesses in this space, but they are definitely bearish on staples right now, which indicates it is probably a pretty good time to start moving in.
I agree. I like buying stocks when investors have kind of, using a metaphor, you know, put them in the trash can and put them at the curb. And you go out there and you go, oh, hey, well, this isn't like the most beautiful business I've ever seen, but geez, man, if you're discounting it by that much, it's not a bad buy.
Look at Infotech. I mean, it was 95% bullish on Infotech back in May after the tariff announcements where it reached a low. That was also a super time to buy. Got up here to a peak. It was still a pretty good time to buy when you look at this, but the bearishness was definitely coming into the market, and it's really starting to pile in here the last 2 or 3 weeks.
Very interesting. All right, so let's keep moving. Let's head over to Monday.com. They are not having a very nice Monday, at least last time I looked. They are down 16.5%. The market has opened. This stock, this is a small cap, and I've seen that small caps. I showed earlier when I was saying, hey, there's some sectors that seem to be really priced well. Software was one of them. The software space hasn't received a lot of love. A lot of the investing in technology has gone into that data center related technologies like semiconductors and related products. And software stocks, even though they have good growth, good fundamentals, have kind of been ignored. And you combine that with, especially over the last 30 days, small caps have been getting beat up. They've been sold off as well. That combination is not good for Monday. I looked at their earnings and I didn't see that there was a big giant problem.
It
Their
was their guidance.
Yeah, I looked at their guidance and I didn't see a problem with it. I guess
It was
they're
just
growing.
it was just lower than consensus. And even companies that are putting out good earnings with good guidance, if you look
Are,
at this quarter, the reward during this quarter compared to previous quarters, you're not being really rewarded for good earnings and good guidance. You're being
yeah,
rewarded if you really exceed it, but you're not if you just meet it. And Monday they're just under their consensus guidance. Even though it's still good, it looked good to me too. But it's just lower than consensus, and the companies are getting punished for that this quarter.
yep. So the growth of 26%. Now it's a small business, but it's still 26%. That looks good. And this is a good revenue company, good margin company, 88.7% margins. So with that kind of margin, they're already generating cash flow. This is a valuable business. Now, when will the market begin to buy software stocks and then that will trickle down to small caps? I don't know, but man, it's getting pretty ridiculous. You have really well-known companies that are really sold off, companies like Salesforce, Adobe, and at some point, those are going to be fantastic opportunities. They may be there now, but if you weigh the value of those businesses, they're really worth a lot. Let me show you my Monday valuation, and then I'll kick it over to my colleague to look at the charts and see what the charts look like. So Monday is discounted by 10%. Now, the discount isn't all that fantastic. I think their cash flow needs to grow a little bit, and they can get there because they have very good uh, gross margins. So if those gross margins, if they do a good job, continue to grow their business, and then get that gross margin down to the net profit margin line, they get that gross margin into free cash flow, then we're going to see this stock really begin to build its value. For now, it's 10% discount, which is not a fantastic discount. And that's including the markdown in today's market. So overall, Monday isn't a stock that I own. I'm being careful with small caps at the moment because I think they are being hit disproportionately. Small caps are really being sold off. There's a little fear in the market. In the market, when it gets fearful, it starts selling off small caps. So that's my analysis on Monday. What are you seeing in the charts for Monday.com?
I'm going to have to adjust the Fibonacci retracement levels at the close today because the level that I previously had it set at was the low from the 21st of August. So if it stays this low, I'm going to have to pull this Fibonacci bar down. That's not a good sign right off the bat. But we had looked at this previously, and we had a couple downtrend lines there. It did break above this trend line on the 23rd of October and approach this upper downtrend line, and it failed to break above that. Also notice that the RSI basically peaked out at the same level we were here. It didn't break out above that level. So it did find some resistance both in its relative strength. The PPO also has been pretty much underwater for a couple of months, barely moved in positive territory here and came right back into negative territory. And once again, just barely got into positive territory recently. So when it started, when the RSI started falling here, that may have been a pretty good indication that there was going to be some price impact on this one. So anyway, the accumulation is not anywhere near peak levels. It is trying to, it didn't also reach the lower levels that we saw back in August. So it did come down, but didn't quite get as low, but it's struggling to get some accumulation here. The money flow has basically been negative since the 2nd of August or October. It went positive in September, and prior to that, it was negative for at least a month or two.
Yeah, I think another factor that's weighing on Monday is in the same industry. You have businesses like Intuit specifically. Intuit, I have a high level of conviction on because it's Intuit, TurboTax, QuickBooks, um, and Intuit has been sold off, and it's brought down Intuit stock price down to a very desirable price. So I'm buying into Intuit. So I think investors, at least investors like me, are like, hey, well, I'd rather buy the cream of the crop at a discount versus taking an additional risk on a company like Monday.com. If I could buy in the same industry, why not buy the best? All right, sir. Thank you very much for that. We had a question on the trade desk. So we can handle that real quickly, or I should say, take a look at the trade desk. It is moving higher. This is in the ad tech space. And year to date, this has not been a pretty picture. 62% decrease in the stock price. So investors have really been on the pain train. If you bought back here, your investment's really been hammered. And this has become a $21.5 billion market cap company. Its PE ratio for the current year is high, but the forward looks pretty decent at 22.6. The trade desk is growing, but the growth did slow down. And this is in combination with its biggest, or I should say, the competitor that is the strongest in the industry is AppLovin. AppLovin is increasing its growth rate. AppLovin is larger than this. So that's the bad combo for the trade desk. If the leader of the pack keeps putting a wider distance between its leadership and where this stock is at, that's a bad sign, because I don't know that businesses want 10 different ad tech, software partners. They probably want one or two. That way they can get really familiar with how to use that platform. They want to combine their purchasing power and get a better deal. Maybe doing business with AppLovin gives them a better discount if they can consolidate more buying power. So all those things are bad for the trade desk. In order for this stock to start working, it has to start growing faster. They could jump up to 25% growth rate, 30% growth rate. That would be the magical ingredient that could send this stock higher. If it doesn't do that, I don't know where this stock's going to go. My expectation is that it's just going to keep bumping along the bottom and really not go anywhere. The fundamentals look fine if you value the company and you're realistic with growth, you're realistic with risk. That's why I use a higher discount rate on the trade desk. That, hey, they're under threat. They're under threat from the big monster that is AppLovin. It's a 28% discount. I'm not going to invest because it's just not. There's not enough gain there for me to take the chance. And getting to know an industry is important in investing, and getting to know the players, right? These companies are trying to get to that addressable market within the industry. And right now, AppLovin is dominating in getting a majority of that addressable market. Is AppLovin going to let up? I don't think so. And if they keep growing and grabbing all that market share, it's just going to hurt the trade desk. Any comments on the trade desk?
Yeah, so we've looked at this one before. I'm going to make some adjustments to the annotations that we have here. One thing I'm going to do is just make this line a little bit smaller so it matches our other. And then I'm going to adjust the length of this upper trend line, which I have connected right here. And it's connected to this high as well. So I'm going to try to keep those two lines connected, or those 2 points connected, but just extend it out a little bit. And then on this bottom trend line, we started here and connected it to the top here. It's connected to a top here. I'm just going to extend that out while trying to keep all of those connected, just so we can see as we move through here. So we can see that it did break out above this upper trend line, but it was only about a week that it traded above that trend line. It was looking pretty good, and then it must have been earnings announcement, and they fell 38.1%, and they basically haven't recovered from
That was a rough day.
Yeah, that was a rough day. So they haven't really recovered. They closed on that day at 54 and they're trading at 44. So they're down 10 extra dollars from this close here. So they traded sideways. We already had a trend line at this point. So it traded down below that, came and touched it, and then it broke out above it. That was actually looking pretty good. But one of the things that I see, if I just add one more annotation here, I'm going to add a small trend line. The one thing you see is the RSI failed to break above 60 on this recovery here. It failed to get above 60. It pulled back, failed to get above 60, and then pulled back even below 40. So we were sitting at, looks like about 30 or so. So this wasn't a good sign when you see this RSI sitting here like that, and it's not getting any momentum above that. We can also see that in the price action. So I don't know what to say about this one. I don't have much hope for it recovering at this point. The accumulation is almost at a 52-week low. The low was on the 18th of September. Has tried to recover, but it's declining again at the moment. Money flow has spent most of this year in negative territory. So this one just does not look good, really, to me.
Yeah, it's rough waters, and when a stock gets sold off that harshly, sometimes you look at the fundamentals and you go, well, that's overdone. But in the case of the trade desk, I kind of agree with investors, which is, hey, they're under threat. And for all you know, they're going to come back and say, hey, we only grew by 5%. Well, that'll be really, really rough. So thanks for covering that, sir. All right. We had a request on a company that announced their earnings today. That's eToro. And eToro, they announced their earnings. And this stock, right, there'll always be a stock or two where you look at the fundamentals and you look at the stock price and they don't match. You're like, the fundamentals look pretty darn good. It's part of an industry that's doing great. It's hitting a target market that's, I think, a good one. And the stock price just keeps going down. It's like, what gives? All right. So I kind of put eToro off the radar for myself, because if I don't understand something, I don't invest. And I don't understand why the market doesn't treat eToro with a little more consideration. And you think about the eToro business, They're doing business primarily in Europe and UK and less in Americas and Asia Pacific. Americas, we got plenty of competitors here. I own Robinhood here in the Americas. They're killing it. I own Futu over in Asia Pacific. They're killing it out there. So for them to be in Europe and UK, it's not a bad idea. They're growing. They're growing their overall profits. They call it net contribution. I call it profit. And they're growing their profit. They're growing their overall revenue. They're getting into crypto. They're getting into what I think investors want to see from a new innovative brokerage company. So those things look good. The fundamentals look good. The stock price continues to sell off. So when we look at their earnings, although it's a little bit choppy, these are fantastic numbers. And a lot of this growth is in the crypto space where you're seeing them open up markets and bam, they had zero revenue before. And now they have, some revenue, which creates a lot of growth. So this is really interesting growth. They're making money and free cash flow. When I look at eToro and value the stock, I go with a very high discount rate of 11%. And, it's out of my home country. It's a newer business. Small cap has competition to some extent. And even when I give it a very high discount rate, which is going to lower the overall net present value of future cash flows and earnings per share, it's still highly discounted. So at some point, when this stock begins to make sense from a cause and effect, hey, the company announces good earnings, the stock price rises. The company keeps growing, getting more customers. The stock price has a upward trend on its price. Then I'll become interested. For now, this is a sick puppy and I don't know what it caught. I don't know if it has a puppy cold or if it's got a real bad illness and it's going to really suffer. I don't know. So it's not a stock that I'm invested in. What do you think about eToro?
Yeah, it's a pretty rough looking chart. So one of the things I noticed right off the bat when I loaded the chart is they haven't been above a 50 RSI since the 31st of July. So that is definitely not a good sign. It's barely been above the 40 line, which is this lower red line. So it's popped above that once on the 27th of October and maybe tried to get closer to 50, but it could not break out above that. So this one does look a little ill. Money flow has been negative basically since the 29th of July as well. And we're definitely in a confirmed downtrend. If I drew a line across here, it looks like it would need to break above about 45 or 50 before it was showing signs of any health again. I'd keep an eye on the 50 RSI. If it can break above that, that would be a positive sign, especially if it can hold it for a few days and maybe drive above it. But this would be on a watch list if I was interested in it, but not anything I would buy at the moment.
Yeah, I think a lot of IPO stocks, and this one IPO'd, about 9 months ago, 8 months ago, they tend to sell off. They're just not a known commodity and they don't have a lot of conviction behind them. That might be part of the overall sell-off in the stock. It's not a bad stock, just to leave it off to the side and, hey, let's look at it in a year. And if their trends are higher, we know that they're generating value, but when's the market going to start, buying into the stock? All right, so let's take a look at a company that Mike, the dividend investor guy, put on the chat. it looks like ARS Pharmaceuticals that has a spraying delivery mechanism for certain drugs is really trading higher. They announced earnings today. I haven't looked at the earnings, but the stock going up 14%. I think there was really good news on earnings. This stock has been kind of it's a younger company that just went commercial on this particular med device delivery mechanism to deliver a particular drug. And this one here, although it's having a terrific year, last time I looked at it, what caused me concern, I think it's gotten better, is they're really in a high growth pattern, but this has gotten better. I had been seeing that they were going to hit a wall if I look at the consensus forecast, but now the growth is looking pretty darn good. So this is looking good that they're going to be profitable in 2027. For now, they're unprofitable because they just went commercial with their drug. So this one here is an interesting stock. I'll show you my valuation, but before I do that, if you wouldn't mind, are you ready for the charts on this one or?
Sure.
Okay, let me kick it over to you, and I'm going to do some work while you show the charts.
Okay, so they did move above a downward sloping 20-day moving average and a downward sloping 50-day. So it's trading above that at the moment. The lows of the day were below the 20 and the 50. Looks like the open and current trading price are in the upper 3/4 of that full candle wicks. So that looks pretty good at the moment, considering we're only 58 minutes in the trading day. The 5-day is turning up today. The RSI is sitting at 54, so it just crossed into bullish territory. So if you're interested in this stock, it would be maybe a good time to, if you don't have a position, to have a small starter position and then watch this RSI from the 9th of October to see if it can press above that, because that would have been about a 60 level. It got rejected at that 60, which is also where I have this upper red line. And you got to be careful when they can't break out above that. So watch it and see if it can break out above that and keep driving forward, because we are definitely on a downward sloping. If we had a trend line here, it looks like it'd be, well, kind of hard to say, probably around the 200-day moving average if I was guessing. So anyway, accumulation had pretty much fallen off to lows of the 52 weeks. Money flow has been negative since the 13th of August. So keep an eye on this RSI. If you want to step into it, it's probably not a bad time to experiment with it and see if it can get above this RSI from the 9th. If it goes and bumps that again and starts on its way back down, then if I was in it, I would move out at that point.
Very good. Thanks for doing that. I'm getting my analysis done as quickly as I can. Let me flip it over to my screen and you guys can see what I'm finishing up on. So this is a new company, and I think earlier in the stream I talked about biotechs that have really incredible fundamentals. You know, here's an example of a company. Sequentially, they grew 100%, like Q2 versus Q3. The business doubled. And it's temporary because they just went commercial with their device. So that growth is really exciting. but we can't expect that they're going to grow 100% sequentially every quarter. They're going to slow down at some point. So it looks like their cash they did burn some cash. Mainly from a net loss. They're selling a lot of units now, and they're recognizing a good gross profit, but they are operating by burning cash, even though they did report that they had $88 million, $282 million of cash on the balance sheet. So they have plenty of cash to operate with. And looking at their gross margins, 80% gross margins. So they're trying to crank out as much product as they can, and they're probably having to build up inventory. This is a device, it's a packaged good. So it's not like, when they get these orders, it's not like a software company says, "Oh, perfect. Thank you for the order. Don't download your software." There's really nothing to deliver. These guys have to deliver a product. So they're building up that inventory. So that's what's consuming cash. So overall, this is an interesting business. Just be aware that you're buying into a business that's going to slow down. They have a very unique delivery mechanism for their medication, and it's working. Doctors are prescribing it. They're growing really fast. I don't have a very good valuation on it, so I'm not going to show it because their cash is negative, free cash flow. I would just say that if you believe in this company, as many investors are believing in it today, up 11%, this is a stock worth taking a look at. For me, I'm not an investor. I'm going to give it a little bit of time, and we'll see where it goes. So that is ARS Pharma. Now, I heard that Zeta is on the move, and I wanted to cover Zeta because this stock, geez, it's had volatility that has just been crazy. The volatility on Zeta, it sold off starting, I guess, October 21st through November 4th. This stock went from 1944 down to 16, and then it announced earnings and it flew up. Now it's hopefully going to keep that stock price and go higher. Zeta is an ad tech company. They compete against the trade desk. They compete against AppLovin. And when I invest in AppLovin, now why do I invest in Zeta? Because their market cap's much smaller. AppLovin's like 200 billion or so in market cap. This one here is really getting it done. You look at their growth rates actually accelerating. I like seeing that. When you have an accelerating growth rate, it looks really good. The most recent quarter, they beat and then they had good guidance. So that's why the market really liked what they had to say. They're still relatively small compared to AppLovin and other software companies, but they're getting pretty good size. And they do have really good margins. 60%, not as good as I thought. 60% is okay, but it's not 80%. But overall, I think their stock hasn't been going crazy like AppLovin. In fact, it's for the 1 year, it's down. Year to date, it's up a little bit. So it's where you buy the stock, right? If you buy here, you're sitting on a nice gain. So this one here, I have a small position on. It's good to see that it's up a little bit. It'd be good to see it keep this gain that it got out of those earnings and really trade higher from here. What are you seeing on the charts for Zeta?
So it is trying to push up against this up or down trend line. Really needs to break above that to start reversing this downward trend. Let me go see where I have these lines attached. So it was the high we saw in November of 2024, and then we're connected to this point as well. Now I'll come back to 1 year. We also have this upward trend line, which is connected to the 21st of April, the 18th of June, And we also tested that again earlier this month. So the 5-day is turning around, the 20-day is curling around, so that's good. 50-day is still declining, maybe flattening out just a bit. So this is resistance right here at this trend line. It'd be great to see this break above that trend line before it really starts showing some strength here. The RSI is sitting right around 55, so just barely into bullish territory. Looks like it's pretty flat even today with the price change. The RSI is actually maybe increasing just a little bit. The PPO is still in bearish territory, but we did have a bullish crossover on the 5th of November. The accumulation was down to a 52-week low on the 31st or so of August, maybe the 4th of November. And I can see that that is starting to increase. You can see the money flow is also in negative territory, but it's starting to increase as well. And that's what causes this AD line to move up. So they're in a position where they're trying to break out. We just need to see if it can break out above this downward trend and keep pushing higher, or whether it just consolidates between this wedge here.
Let's see if it happens. Let's see if it happens to go higher. I'll be happy if it does. If it trends higher, I'm probably going to buy more shares. All right. So before we go to the next one, which is going to be CRM, let me take a peek at the market. What is going on with the stock market? Whoa, we have a nice green day. NASDAQ is up 2%. S&P 1.19. What sectors are leading the charge today? All right. Broken record. Semiconductor going higher. Software and consumer electronics space is catching a bid. But you see how software, yeah, we want to put all our money into the semiconductor basket, but forget about software companies. Google and Meta, I'm okay with that. Amazon, very good. Eli Lilly is up. Boy, the health plans are really getting hammered. And I put Oscar and ELV on the list of stocks we're going to look at. We'll take a look. Today, the subsidies for the Affordable Care Act, they were not part of the reopening bill. So that's the pressure on health insurance payers. Looks like consumer staples, the bears continue to sell off consumer staples. Daryl showed that, the pricing is pretty darn bearish to a point where, come on, there's a lot of value there. I'm actually buying into two stocks that I think are going to make me some money. Procter & Gamble is one of them. I think Procter & Gamble is a very well-run business. Hasn't done much, but I think it's a good stock to own in the staples category. Kroger is a big position I have. I'm good with that. So, and then Colgate Palmolive is a newer stock that I'm buying. So I'm kind of buying the fact that, hey, consumer staples, right? They're getting hammered, but I like buying stocks when the market's really counting stocks out and saying, oh yeah, consumer staples, nobody wants to own those. Well, I'll take a couple shares at a steep discount. Thank you very much. And then when we start getting hammered on the growth stocks, we'll see consumer staples rise. All right, so let's get back to the action here. Salesforce. This business, okay, I've known of Salesforce since they IPO'd. I knew since they launched their business in the 90s. It's a company that revolutionized, in a way, the software space by being one of the first innovators to provide software as a service. And they have done terrific. And more recently, they continue to grow. They're a big business, continues to grow. They really have a strong agentive AI business. The market doesn't care. It's like, hey, Salesforce, if you don't produce semiconductors, you're out. And they don't produce semiconductors, so they're out. They're down 28.87%, which is not matching their fundamentals. When we look at the quarterly, almost 10% growth on a quarter that's above $10 billion. So that's $1 billion of growth. I looked at Zeta. Zeta as a whole, the whole business is $1 billion. Salesforce grows by that amount in one quarter. So that's pretty phenomenal. Over the course of a year, they grow by $4 billion in annual revenue. And they do that while producing fantastic free cash flow. Look at that growth on that cash flow. Isn't that a beautiful chart? When I see charts like this, there's more confidence in the data. There's more confidence that this business is going to continue to raise its free cash flow. Margins, 77%. They're expanding margins on a big business. So they're growing, profitable, free cash flow, stock price is dropping. It's like, what the heck? And it's a story. It's the AI story. If you're not in that data center, market's not liking you. You're just not the right flavor that the market really likes to order nowadays. And Salesforce, as a result, is a discounted stock. Now, I have been buying into Salesforce. Daryl, when are we going to hit a bottom for Salesforce? And when is this stock going to rise?
I was just adding a downtrend line. I'm going to go back a couple of years and see if I can see. Yeah, I can see one here. So I'm going to put that on here. I'm going to go and select an auto support resistance line. And I'm going to put it about right there. And we can see where that gets us. So the reason I attached it right there is we had a bottom here. We had not a bottom. It came down and touched that line, touched the line there. Looks like it touched the line there, touched the line there. So that's where it's finding support at the moment. Did break out above that back in November of 2023 and rose to a high of around 366. And it really hasn't found its way since December of 2024. So let's just go to 1 year now. So it is getting pretty close to this support line. In order to get out of this downtrend that it's in, it needs to break above this downward trend line. I'm not actually seeing much hope for it at the moment because we have a downward sloping 200. The 50-day just rolled over and is now going down as well. The 20-day rolled over 3-4 days ago and it's going down as well. You can also see that the RSI has really failed to peak above the 60 level for quite some time, since the 20th of May. We may have had a slight break above 60 for just 1 day, right around this trading day right here on the 21st of October. PPO is in at a bearish crossover, and the black line has moved down into bearish territory. And the money flow is currently negative. So I would not be surprised to see it come down and test this support line once more. It's tested it many times, at least 4 or 5 times that we saw. If it breaks down below that, then be really careful.
Oh, man. Well, I can't argue with that. You're basically telling me what the market's been doing, and it seems that the market's going to keep doing what it's been doing. At some point, it's going to go up. It's my expectation. And when it does, I will buy with both hands. I will be buying Salesforce very quickly. For now, I'm going to be careful with it because I agree with you, sir. Thank you. So somebody asked about Global Foundries. And Global Foundries is a semiconductor foundry, and I believe it is located in the U.S. And it's was almost going to be acquired by Intel. Yeah, looks like they're in New York, headquartered in New York. And this business is $19 billion market cap. The 1 year down 20%, just hasn't done anything. Revenue 6.8 billion. P ratio looks pretty darn reasonable. Now, while the semiconductor industry has been exploding, like just going higher and higher in growth, if you look at TSM, their revenue is really good. This business has been contracting. That is not a good sign. The latest quarters, they've been growing a little bit. Now, this is, I think it was Benjamin Graham that had the term. This is maybe an unspent cigar butt. Like, hey, you found a cigar butt, it's half smoked. There's still some cigar to be smoked there. Maybe. And for all you know, another business, let's say a TSM or somebody else, acquires them for their assets. If they have a foundry that's productive, they could put chip orders to be produced in that particular foundry. Potentially. Let's take a look at their free cash flow, their margins, and so forth. So I'm going to look at the trailing 12 months. We know that the last couple quarters, they've had a little bit of growth. Now, the gross profit is not very good because as a foundry, they're actually doing something, but they're not performing as well as TSM. TSM has a gross profit of like 50%. And these guys, their gross margin's 23.7, which is not good. Their free cash flow is good, 972 million over the last 12 months. It's been kind of flat for the last year or so. They are operating at a small loss, but they do have a good free cash flow yield. Okay, what's the forecast on these guys? 13 analysts cover them. They say they're discounted. Interesting. Okay. Green on the screen. Wow. Hey, this isn't a bad idea. So this might be one of the few semiconductor stocks that are discounted. You consider it's $1 billion free cash flow business. It's going to be growing next year by 8%, then 10 and 15%, and make itself a $9 billion revenue company with pretty decent profitability. PE ratio coming down to 11. I think this stock's a pretty good idea. I think this one has the right fundamentals. Now, can it catch the attention of the market? I don't know. The stock's been just really, really struggling. The business is not, it's not relevant. It's not in any conversation strategically that, oh, Global Foundries is producing chips for NVIDIA or one of these big important companies. But who knows? For all you know, one of these, I know Google Alphabet's designing their own chips, and they have a chip that goes into their AI operations. But I'm going to guess that they have our friends over at TSM produce them. But maybe that capacity domestically becomes really important, which it has. I think the U.S. government would like to have semiconductors produced here to create jobs. So this isn't a bad idea. This is one where I like what I'm seeing, and I'm putting it on my homework list, which means I'm going to do a deeper dive analysis on it on my free time. What are you seeing on the charts with global foundries?
Okay, I went back for a few years because I wanted to just see where the best support and resistance line is. So I think I found this point right here. And the reason I selected this one is it found support here in June of 2022, found support there in October of 2024, found support there in February of 2025, broke through that support, which then became a resistance line. It broke above it about a month later, came down and dropped just a little below that line, went back above, came down and tested it once more, and then it faced a little bit of resistance there in the last month or so. So that was the best fit that I could find over that time period. So that line is resistance at this point because it has broken down below it. And in the shorter term, I connected a downtrend line from February, connecting 2 points here. And that gets us to a price of about 37 or so that we would need to break out above. If it does that, then you've broken 2 lines of resistance. If it breaks above this auto support line there, that would also be positive, but then it would face immediate resistance from this downtrend line. The 200-day is also not just above where the resistance line is. So it's sitting at about $36.72, and the resistance line is closer to 36.47. So just barely above that. So you have 1, 2, 3 points of resistance between the current price, which is 34, and this $37. So you got about a $3 price advance that you would need to see to break all 3 of those resistance points. Looks like Friday it traded below the 50-day moving average, which is upward sloping. It is really positive to see that it didn't trade below that again today. So this break below the 50 on the close isn't necessarily a persistent thing because it is closing up higher today. So that's somewhat positive news. In the 20-day, I can't really, I may have, no, it is there. Let me see if I can see where that, yeah, the 20-day is just above the 5-day. So it is trading right at the 20-day at the moment, but it looks like the 20-day, it is increasing. So from Friday to today, that 20-day looks like it is increasing at the moment. So on Friday, it actually traded almost down to this upward sloping trend line. So things are looking a little bit more positive here, but it's got to work. It's got some work to do. Needs to get up about $3 a share to break above this upward resistance line. So it did reach an RSI of just about 70 at the end of September. It has traded down. Notice that it's staying above the 40 line. So I would put that in the positive category. It is currently trading below it, but just barely. So we're sitting at 49.68. It doesn't have to move much higher to get above the 50 line. PPO is in positive territory, but we're getting close to being in bearish territory. The black line did cross down through the red, so that's bearish. I'm also noticing the accumulation is at a near 52-week low. The distribution had been pretty significant on the money flow since about the 30th of July. We just moved into, it's not quite bullish yet. It needs to be above that green line that I have there to be bullish. So 0.05, and right now it's sitting at 0.047. It's just barely below it.
Very interesting.
Yeah, it's got a little bit of work to do.
Yeah, what I like about this particular, investing idea is it's not long on the tooth. It's actually we're a little bit early in the game, and if Global Foundries continues to improve their business and they actually are going to hit that growth forecast, it's looking pretty darn interesting to me. So I think keeping an eye on it's a really good idea. I do not have a valuation on GFS. I'm going to do that, and maybe we can talk about it on the next stream.
Okay.
So moving on. Now, OSCR Health came down with a terrible flu-like symptom situation on a Monday. This stock, if you want excitement in your life, you get a stock like OSCR Health, and you'll have high highs and low lows all in 1 year. And this stock was really tracking nicely for months, and then a lot of things unraveled. Now, the big story is that the U.S. government is not going to fund the subsidies for the Affordable Care Act. So it remains to be seen if people, consumers of health insurance, are going to buy health insurance. And if they do, and they like, I think OSCR Health is doing a very good job of acquiring customers, it may be actually a strengthening of the health insurance business. This is what I mean. The situation, I guess, that we were in was this industry was being propped up by subsidies. Got it. Remove those subsidies, the strongest are going to survive, and the strongest are going to thrive. And maybe we do get rid of some deadwood in these businesses, and the strongest are going to become more powerful and become more valuable in the future. I think OSCR is a very good business, and that doesn't change. Their growth, and I think their growth in the sector that, or I should say, the segment of the market they're after, which is individuals and small businesses. I really like that they're focused on that because nobody else is. Nobody else of big size like United Health or Elevance. So if these guys continue to grow, it looks like they just announced their earnings, but they're going to announce in 3 months, which is, I guess, beginning of February. I'm just going to continue to own this stock. The company grew in their last report by 23%. So that's going to be the most important number that I'm going to consider when we see their earnings on the next go around. And if they grow that number, man, this stock's going to really flourish. Between now and then, I don't think there's any news that's going to help the stock. So what would I do with OSCR Health? Well, I think strategically add shares is going to be my play. On a day when it goes down 14.5, I'll add some shares. But I'm not going to be too quick about adding too much too fast, because I think this stock could test its 52-week low before it starts to rise. The next earnings is really going to be critical for them, along with Elevance Health. Elevance Health also was part of the big sell-off that is happening in health. And this isn't too bad on a day like this. Now, Elevance Health has been a good discounted health insurance payer. I was an owner of Elevance Health up until I decided to switch horses and I started buying United Health. And these guys are down today. They have terrific PE ratio. And the same applies. They announced October 21st. So I guess we'll see their earnings on toward the end of January. And that's where we're going to see, are these businesses going to be good without all these subsidies? And I think that Elevance and United Health, they tend to cater to the corporate customer, and that is not affected by today's news. The corporate customers, paying for part of, they actually, in a way, subsidize healthcare because they pay for a portion of it for employees. Then the employee also pays for part of it. Since we've looked at Elevance and Oscar, let's take a look at United Health and see what's going on with United Health. It hasn't gone down too much. Now, this has not been a winner yet, but at certain times it was a good stock to own. United Health has really brought in a lot of famous investors into it. And this is why I bought United Health. In a particular industry, you're going to have the strongest company. And it might be a couple of really strong companies. But in the health insurance business, United Health is the strongest player. So when the opportunity came up, hey, and I was an investor in United Health for a long time, made money, sold it in 2022, somewhere around here, and then was out of the stock. And then the stock did this. And I'm like, I'll buy United Health. So I started buying into it. This is a great business. I'll be a long-term holder. And a bunch of famous investors, Warren Buffett, a bunch of others have really jumped into United Health. So I'm good. This is why this is the best player in the industry is always going to hold up a little better. And that's what it's doing today. It's holding up better than Elevance and especially Oscar, which is kind of a small cap, higher growth, higher beta. But boy, this thing can really, really this could be a really nice investment if it continues to grow. That's the most important part of their business. Grow and be profitable, and we're good. Any thoughts on Oscar and Elevance?
So we've taken a look at Oscar before. The one thing that I did do, we drew the upward trend line here the last time we looked at it. So what I did today while you were speaking was trying to find where the support and resistance was. And over a 3-year period, I found this one, which had support in March of 2024. It found support at that line on the November 2024, during December and early January of 2025, February of 2025. Then it broke below it, looks like for a couple of weeks, and then dropped below it for at least a month here. Did finally break out above it again, came down and tested it in May, tested it again in June, tested it all throughout July and August, and then bounced off and ran up. So it has a lot of support right at that level, which is about $13.95. So let's you can also see most of the buying over this 3-year time frame has been right at the level it is right now. A lot of buyers right here. So let's go to 1 year and we'll take a look at that trend line. The disappointing thing here with this trend line is, like I said, we drew this quite a while ago, and it broke down below that trend line. That's usually not a very good sign. We see the 50-day has flattened out and is looking to start trending downward. The 20-day is trending downward. The 200-day, it is trading below that today. It tested it on Friday. That is still upward sloping at the moment, but if it trades for very long below the 200-day, we'll start seeing that 200-day pull down as well. Now, something that's somewhat fascinating here. Whoop, that's the wrong command set there. The interesting thing is all this volume that started in May. Now, I don't know what started driving that, but when we were looking at the 3 years, the volume had been pretty steady until May of this year is when it really started accelerating. I do see the average is starting to trend back downwards. The RSI is at 32 at the moment. The PPO is in negative territory. We had a bearish crossover back on the 10th of November. It tried to cross back positive, but failed to do so on the 21st or 22nd. Accumulation is still increasing since it bottomed out in July, and the money flow is currently negative. My best guess at this moment is that it's probably going to test this support resistance line once more.
All right. So that one's going to be an interesting one to watch. And I think it's not a space that has caught much support from the economy and decisions that are being made in Washington. We'll see how it goes.
Yep.
All right. So we had a question on Brookfield BN. What I think about it as an infrastructure play. I don't think these guys are going to directly benefit from it. They might be able to sponge some value, maybe issue out some debt that they get paid a good yield on. That's the extent of it. I don't see that they have a killer technology that all data centers must have, like an Astera Labs, but I think they can sponge some money from the industry. All right, so I wanted to look at Robinhood, and Robinhood's having a good day. Now, it's kind of had a couple rough days in between. You see that over the month, it's gone down 11%. It announced on November 5th. The announcement was good news. Company keeps growing really well, and it's catching a bid today. But overall, this is a $122 billion market cap company. It's been an excellent stock. Just if you bought at the right times, this has just been an awesome stock. Now this one has gotten a little expensive. The revenue growth has been fantastic, and they're growing in very creative ways. So they're growing their base, businesses, brokerages, crypto, but they're adding new businesses like prediction markets and so forth. So I really like the creativity and the overall growth of the company. So if they keep growing at those rates, this stock's going to be fine. And free cash flow for the quarter was negative, but overall, trailing 12 months, it is positive. What's the forecast look like? 21 analysts, Robinhood. And Robinhood is kind of hated by more of the traditionalists on Wall Street. They're like, oh, Robinhood, man, they're gamifying investments. And kind of they want to stick with the traditional firms. And I think it's actually great to have Robinhood come in and come in with new ideas, kind of shake things up. So some of these analysts that are bears on Robinhood maybe aren't paying attention that, hey, it's 2025. It's the AI era. It's everybody's connected. Everybody's watching TikTok. Everything has to be fast and very consumable from a digital format perspective. And Robinhood really gets that. I think their people, their talent really satisfy that need from the market. Now, their growth is going to slow down, which is interesting. So we'll see if Robinhood could get creative. This is still very good growth, but if they get into kind of a 10 to 20% growth rate, the stock isn't going to go up 300% in a year. I mean, a stock shouldn't go up that fast. If this thing settles down, I wouldn't be surprised. Earnings per share is going to expand. Their P/E ratio is coming down. Again, if the stock sold off and the stock price went down, I wouldn't be surprised. I haven't sold one share of Robinhood, and I'm up more than 700% on this stock because they just keep creating more value. Like now it's prediction markets. In a year, they're going to come up with something new and that has an expanding addressable market. Why sell that stock? No, I'm in for the long haul. It's easy when you're up on a stock, most definitely. But this one here, it has been under some pressure lately. And overall, I still think it's a discounted stock. So it's a good stock for me to continue to hold and maybe buy at certain points if the market is going to reduce the price, offer me a really nice price. Like I bought more shares here, bought more shares here. Yeah, I'll buy more shares. I'm good with this business. There's nothing wrong with concentrating for me, nothing wrong for me to concentrate large investments in businesses that I really, really like, that continue to issue out earnings reports that look fantastic, that create new ideas. Hey, I'm going to invest more. I want to be a bigger owner of that business. I want more shares. So Robinhood is doing well. What are you seeing on the charts for Robinhood?
Well, congratulations to anybody that's in Hood because this chart looks fantastic. This is a 3-year chart. You can see where they really started off on their growth at the beginning of 2024. And when we looked at this last, we added this 2-year trend channel. So I have some stocks like Nike and Starbucks and a few other ones that I've gone back 20 years on them, Costco and a few others. We don't really don't have a accelerating price until starting in 2024. So that's why we went back just 2 years. But we created this trend channel, and you can see for the last 2 years that it has pretty much stayed inside that trend channel. It fell out in April of this year. And I don't even know if you should really count that because it was the tariff announcements and event. So we did break below that and came down and tested a 200-day moving average. We also tested a 200-day moving average here. If you're looking to pick it up, the 50-day looks like a really good place to do that. So it dropped down below the 50-day on last Thursday. And by the next day, it was already trading above it. And today it's trading above it as well. So you can see we're pretty much right in the middle of this trend channel. So basically, you take a little more risk to buy it in the upper part of the trend channel, but I still think you could do that and be okay over the long term. The best place would be at the 50, or if it did fail and go to the bottom of the trend channel, I still think you're pretty safe. One thing I want to point your attention to is this RSI. This is about the most powerful RSI levels that I have seen on a chart for a stock. So what you'll see many times is the RSI will peak out when the price reaches the high. And then a subsequent high, you'll see the RSI not get back to that same level. But look how many times Robinhood has done that over the last 2 years. I'm counting about 1, 2, 3, 4, 5, 6, 7, 8, 9 times. That I don't know if I've ever seen a chart like that, and I look at hundreds of charts a day. So I don't own this one. It doesn't really fit within my investment style. I'm kind of sad when I look at it and see what I missed. So if you're in this one, congratulations. If you're not, think about it.
Yeah, thanks, Daryl. And maybe in a year, I don't know when, we could talk about, like, maybe we can dedicate a live stream, or at least have a segment about exit strategy. Because buying into stocks, right? Everything's kind of, hey, I'm going to buy it because everything is looking good, and you buy it. But on a long-term hold, what do exit strategies look like, especially on a stock like this? Because it's like, okay, sitting on a big gain. How do I get out? How do I, because I know the term is, oh, buy it and hold the stock forever. That just doesn't make any sense in some cases. If you buy a stock 20 years later, you want to retire and move to Europe, if you're in the US, you're like, yeah, I want to cash out a stock that I bought for 50 grand. It's worth 500 grand now. Well, that's a reason to exit a stock.
Yep.
Go have fun in Europe. That kind of mentality, I think it's productive to think about it once in a while, because we are in an expensive market, and some of these stocks are priced quite high, and they've gone up quite fast. This one has had kind of a nice 3-year run, but like Astera Labs, it cranks up. It goes up 20, 30% in a day. And that one, even though I own it, I'm like, man, that's too much of a sugar high. We're going to crash it one of these days. All right. So last comment on Hood. Nah, you bought it, Mike. You got to give yourself credit. You bought Hood. Good job for doing that. I get the frustration on the back end. My frustration on Broadcom, I was smart enough to buy Broadcom and sold it too early, but I was, I guess, wise enough to buy Broadcom. Let's talk about on holding. Let's put on our running shoes on and go for a jog here. This stock has been going down, and our friends over at Nike, they've been in a world of pain with regards to their stock. This company is looking like they're doing the right things, but speaking for myself, I'm not the first one to buy into footwear companies, apparel companies, because I think it's they're really popular for 1 year, maybe 2, and then the style changes, and then consumers on to the next really neat thing. These guys have entered the market. They come out of Europe. They have a unique design for their shoes, and they have been growing their revenues. And their revenue growth, especially recently, is looking pretty darn good. So I give them an A with regards to their revenue growth. When we look at margins, I think their margins are better than Nike's. Gross margins 61%. They are profitable. Okay. So I think that and I think I have a valuation on them, is discounted. But when's the market going to buy these types of companies? We are not necessarily in a booming economy. I think this footwear is not the cheap stuff. It's not like, hey, you want to go in and get a pair of sneakers that you can just kick around and get a good price on. That's the wrong brand. This brand is like very comfortable. It is different, and it has a lot of, I think the people that buy on probably appreciate some of the aspects of that design. It's really discounted according to the analysts because it's expected that these guys are going to keep growing. So I can't argue with an investor buying on holdings. I'm not an investor of on, but let me look at my valuation here. I think they have a small discount. I put a higher discount rate on them. Maybe I can go to 8% because interest rates are dropping. So it's not a fantastic discount opportunity, but it is discounted. And it's been a stock that's just been beaten down by the market. What are you thinking on?
Yeah, so while you were speaking, I looked back 3 years and I found two resistance support lines. So this top one has been tested as resistance back in August of 2023, March of 2024, March of 2024, and then as support, July of 24, August of 24, April of 25, and it has broken down below that support. So it found support there many times. And the next support line that I see is sitting down just shy of $25 a share. So if we zoom in just a little bit, not that far, we can see that it is on steady decline. I can put a trend line here. So that's got 2 points touching. Maybe if I move it down a little bit, that might actually be better, because now we have 1, 2, 3, 4 points touching that line. So that's much better than just having 2. So we can see that it needs to break above about $40 a share to be back in a positive trend on this short trend. The 200-day is declining, the 50 days declining, the 20-day is declining. So I'm going to go back out to at least 2 years so I can get this bottom line here. If it doesn't find some support here pretty quick. Now, there is a lot of buyers that bought in over this 2-year period between about the price where it's sitting right now and down to $32. There were a lot of buyers. The next really set of buyers came in at basically just above this support line. So it might find some buyers here. I don't know what the sentiment is on this stock. I can tell it's not very good at the moment because the prices are going down, but it has broken below this support level. So it could find its way down to this next support level or find some buyers in these two price ranges right here. The RSI is extremely oversold. PPO is negative. Accumulation is going down and doesn't look like that's going to reverse anytime soon. Money flow's been negative since the 29th of July. Not looking too terribly good at the moment, but it may find support here in the not too distant future. We'll have to see.
I mean, the good news is that they are operating their business quite well. So, I mean, that is a good news. Like they're growing. That's good. And if you're growing and you're making your business fundamentally stronger, more valuable, that is a positive. Now, when is the market going to buy the stock? That's a tough one because the market is going to buy during certain years and not buy. So let me show something really quick and kind of offer up a few more thoughts on. So on is right here. It's in the orange line. I guess it's underperformed Nike, which is obviously the biggest name in the business, right? And then Deckers is really, really been under pressure. But if you look at the 5 year, these stocks have had a very different, uh, trajectory. Deckers was just killing it for a while, and On was doing okay. But over the 5 year, these stocks haven't returned a very favorable result. Now, the comment I would make is, try to understand, like, you as an individual investor, what industries do you really understand? Can you really kind of seek out or understand what's going to make a business successful or a failure? And it may be footwear. For me, it's not. Um, I I know Deckers really well. They were actually my client for a number of years. They're up in Santa Barbara. I've known of them quite well. I just don't understand footwear and don't believe in it like I do other industries. So I try to be really focused on industries that I get and stay out of the industries that I don't get. So that's one, word that I would put out there is try to be good at a couple things. And once you get good at them, try to be great. Once you become great, make a lot of money. There's no rule against buying or not buying in a particular industry. Go buy the stocks that make you a lot of money, learn how to make money, and then get even better at making money from those spaces that you have figured out best. Okay, so we covered, I think, all the list. The market is still flourishing, but not as well. It's kind of given up a little bit of its momentum. It looks like Palantir is back. Maybe the CEO of Palantir had some harsh comments against Michael Burry. That was kind of entertaining. And then we've got Tesla is higher. Eli Lilly's just been doing well. Look at that. Google's up, Meta's up, Netflix is up. And the whole sector, yeah, it's not flourishing as to the extent it was flourishing earlier. The NASDAQ is up 1.5, and then the S&P is up. So it's still a green day, but it's kind of lost some of its momentum. Yeah, you're welcome, DJ. Good question on. All right, sir. So I think we've come to a good place to conclude our stream. But before I do that, what's going on? Anything else you want to add on?
Not at the moment, Victor.
All right. And what's your game plan for the week? Anything interesting coming up on your channel?
I probably start making a few more videos after this afternoon. My last holding will report for another week or two. Then NVIDIA comes up. That'll be a big one. I'll be sure to put a video out on that.
Yeah,
So
definitely.
Yeah. And I presume we'll probably do a watch party on that one.
Yeah, it'd be a good one. Last time we had like 3,600 people on our watch party.
Yeah.
Today we had a lot of people on our stream. Thanks everybody for joining us. And I had the wrong expectation on the stock market being closed tomorrow. It's actually going to be opened tomorrow. It's going to be open for normal trading on stocks. The bond market will be closed, which is kind of no news because bonds are so darn stable that if you miss a day, you don't really miss much. But stocks, we're going to be open for business tomorrow. And we'll see where it trades. Unless something comes up, Daryl and I will be streaming on Wednesday and then on Friday. And then we'll pick out certain big events like NVIDIA or other big stocks that we think would be interesting to put into a watch party format. We will do that. So thank you so much for joining. It was a really good live stream. Thank you, Daryl, for doing what you do.
Thank you, Victor. You too.
And thanks everybody for joining. And just last comment, blocks for fun. We did a deep dive on Instacart. If you watch the recording, it should be the very first stock we cover. So you'll be good to go there. And we did a deep dive. We went all the way. We did evaluation, charts, everything on Instacart. Overall, the stock was flourishing. So hopefully it continues to flourish. All right, everybody. Well, have a terrific Monday. Thanks again for tuning in. And we will see you on the next live stream.
Take care, everyone.